Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what is happening, what we can expect moving forward and all of that good stuff. So as usual, if you enjoyed, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is of course down below in the description. If you're interested, $3 a month where I share my intraday thoughts on Tesla as it's moving throughout the day. So definitely check it out if you will. But yeah, with all that being said, let's just jump right into it and let's talk about it. So Tesla up on the day, which is beautiful. With the market itself, of course, Tesla up almost 1.5% on the day, putting us just shy of $243 per share roughly. So, you know, compared to the market, a bit of an arguable underperformance, right? Compared to QQQ, at least Tesla should be up at least 2% minimum, but you know, a little bit on underperformance. But you know, the main reason for that is because of course, not only are we just still stuck in this little congestion period, but we are at the moment at least getting rejected by that 100-day moving average over here. So let's discuss all of that as I move this over here to make sure I hopefully don't miss anything. Now, there's a few things to know here, right? So obviously today overall, we did finally close above 240 to 242. That's really, really good. Unfortunately, still below 243, but excuse me, not bad at all. Ideally, obviously, you also want to close above the 100-day moving average, which is where we got rejected today. But pretty damn good, right? A pretty nice looking candle. Obviously, looking overall solid, in my opinion. Still solid. The bulls are really trying to find a way to push this through and really break out of this congestion period. And the bears are, yeah, they're not doing a very good job, I guess, to say the least. So the way I'm looking at it is this. Obviously, we have this bull flag. We talked about all this. Now, one extra thing that I just realized as well that we could be in is a rising triangle. So the way you want to look at it is as follows. So if you take a look at this blue line right here, right, the bottom of this channel that we're in, pretty much from down over here, right? So let me go ahead and fix this a bit and move the tiny bit, something like this, right? Pretty much from the bottom over here when we were at about 195, right? We have this obviously bottom part of the channel. So this blue line, perfect, right? Bounce off, got really close as well. Awesome. A rising triangle is when you have this and you have a resistance level that is pretty much the same resistance level that you're constantly getting rejected at. But each time you get rejected and you fall down less, right? Like you set essentially a higher low, I guess is the easiest way to put it. You set a higher low, right? And that's kind of what we're doing here, more or less, right? You can even argue the fact that you can maybe even technically bring this up like this if you really want to and make the argument the fact that we never really closed below this line and we're constantly making higher lows. You can easily make this argument. But the point I'm trying to make here is we are in a potential rising triangle. So take this blue line and take the green line on the top of this bull flag. And that right there is a rising triangle because every time we were constantly setting higher lows, higher lows, higher lows, higher lows. And we're constantly getting rejected at the pretty much the exact same level of this about 246, 247-ish level in terms of actually being able to close a candle above it, right? We're not able to close a candle, let's just say above 247 to make it simple, right? So that's what a rising triangle is. If you haven't, I'll show you like here, rising triangle pattern. This is what it looks like in terms of just like a very easy way of looking at it. This is what it looks like. A rising triangle, uptrend, kind of consolidate, constantly setting higher lows, same flat upper trend line, and then you eventually break out. It is a bullish pattern. That's the reason I bring it up. Also, it is a bullish pattern. On top of that, right? We have the bull flag, we have the rising triangle. And it's looking good. It's looking good. So that's the way I'm kind of eyeballing it as of right now. I'm going to bring this back because I personally value these kind of trend lines while touching the tips of this like this, give or take. Now, that's another thing that I wanted to point out, that we are technically in this rising triangle as well as that bull flag, as well as this large bull flag on the daily. So it's overall looking pretty darn bullish in my opinion. So those are the main things I'll be paying attention to right now. Obviously, we're still in this congestion period. Obviously, there's still a lot of work to be done to really break out of this area and to, you know, the bulls want to break above 247. They want to start closing candles above 247 and even ideally 250-ish, like low 250. So that's like that super important range where you want to start closing candles above like that general range. Like starting above 247 is great. So even if it's not 250, that's fine. But even closing a candle above 247 is a start. Like that's a really good start, right? And that can be what it takes to really start getting that, you know, the options market bullish, really just drive momentum and to really get that extra push needed to go above 250. So just keep that in mind, right? But ultimately what I'm trying to say is it's looking bullish. And I've said this for a while. I know people are expecting Tesla to crash and go back to 200. I don't think it'll happen. I don't think it's impossible. But again, unless we break below this trend line, which again, obviously just we'll see. Maybe we will, maybe we won't. Obviously, I'll let my members know if I start seeing cracks. I'll let you guys know, of course, as well. It'll just be technically a little bit late, naturally. But until I start seeing cracks on this trend line, the bottom of this the channel, this blue line, I'm bullish. Like I'm bullish. Even if we crack below this trend line, the blue line, I start being a lot less bullish, but still bullish until we fall out of this, the bottom of this green line, which is pretty much 230. That's when I really start turning bearish. That's something I've said for the past several videos, right? Nothing's changed, but we're still in this consolidation range over here. Let's go ahead and bring out the Bollinger Bands right here. You can see they're actually not as tight as I thought, honestly, maybe because we were still kind of contracting. It's a little tight, but it's not as tight as I expected it to be. So the Bollinger Bands are fairly tight, but I honestly expected it to be a little bit tighter than that, considering this consolidation range that we've been in for quite a while now. Maybe on the 65-minute chart, it's a bit tighter. Let's take a quick peek on that. Yeah, you can see it's getting very tight over here at the edge. So it looks like a big move is definitely building up here for Tesla. And honestly, it wouldn't shock me if maybe even next week, early next week, we finally truly pick a direction. Because keep in mind, right? Keep in mind, as like, if we're actually playing this rising triangle, right? Because this line is forcing us to constantly set higher lows, the room to fall down further decreases. But as the room to fall down decreases, that also obviously means that the room to break to the upside, it decreases as well. So the two crucial levels are constantly getting closer and closer and closer, right? As this blue line is essentially coming up to this green line up here, right? It's getting tighter and tighter and tighter and tighter and tighter. So just take that for what it's worth as well. You can also make an argument, the fact that we're in something that looks more or less like this. Pretty much this both like actually, if you go to the weekly, right? You can easily make this argument too, where I guess you could just look at it like this, the same concept, but just use this red line of this top of this bow flag, and then if we draw a line like this, something like this, go ahead and make sure it draws properly, right? Something like that, right? You can also make this argument too, where we have this resistance up here, this red line, essentially the top of the bow flag, and then you can also make this argument of this, this green line, which is essentially what I drew on the daily chart, right? That's roughly what it is as well, right? That trend line, that the bottom of the channel, that blue line, right? This is essentially that. And you can see it's also getting very, very tight, and a move is getting very, very close. Like again, I would not be surprised if next week is the deciding week for this move, whether it's to the upside or to the downside. Again, I am more biased, I guess, if you will. I do believe it'll be to the upside. I think there's a higher chance of it being to the upside, but I am not so bullish to the point where I'm just all in at this level, because I'm just so confident it'll be to the upside. I do have cash ready in case it isn't. And if we start cracking, I will start selling much longer dated calls against the shares I am holding. But that's just how I play. But that's kind of the main thing I'm looking at right now. These are the main concepts I'm looking at. Now, again, don't forget, there is still possibility, as I zoom out a little bit here, there is still possibility of, like, I don't want to just sound only bullish here, right? We have to take a look at the bearish aspect. And of course, the bearish aspect, pretty much the main bearish thing that can still happen that the bears have to, like, cling on to, if you will, is of course this head and shoulders pattern, right? This head and shoulders pattern is still a thing. It's still very active. It hasn't nullified, like I talked about, I think it was yesterday even. So this is still very much a possibility, right? This can still play out, and this can actually, that tightness that we're getting right now in that, like, let's say rising triangle or whatever, right? There's like three patterns that we're in right now. Because it's getting tighter, obviously the move is going to get picked soon. It can, of course, still go to the downside. And if anything that forces it to go to the downside, it'll most likely be this. And if this plays out, we most likely will be coming back down to like 215, maybe even as low as low 200s, like 205, 206, 207. That is still a possibility, right? Which is why, again, I still have cash, of course, right? I'm about half cash, half not. But with that being said, this is pretty much the main thing the bears need to rely on, or I guess relying on. I wouldn't bet on it. I personally don't think that this is the higher probability of occurring compared to everything else we talked about on the bullish aspect. I do think there's a much higher probability of that occurring over this, but you'd be a fool to just completely ignore this and not at least take into some form of consideration as well. But those are the main things I am eyeballing right now. That's the main stuff I'm looking at, right? Tomorrow, of course, once the week closes, we'll take a look at the weekly candle, and we'll take a look and see how it's shaping up. And so far, it's looking pretty damn good, right? We're constantly, keep in mind, if we zoom in here, each weekly candle, yes, is a long wick at the top and even slightly at the bottom. But the point is, we're constantly closing at higher levels every single week. So take that into consideration as well, right? Still getting that squeeze indicator here, so that's interesting when that finally explodes. But we're constantly setting higher closes on each weekly candle here for the past 4 weeks, and seemingly, unless tomorrow is a massive crash, this week as well. So pretty important stuff. It's been kind of boring. We're definitely going sideways for quite a while now, but I definitely think that the big move is building up. I think it's going to happen probably next week. I'd be surprised if it doesn't happen next week, where we don't finally decide the direction we're going. And as usual, I'll have my members updated pretty much as I see the cracks starting to show for the bulls or for the bears. And of course, I'll let you guys know as well. Don't get me wrong. I will, of course, always make these videos and always let you know as well if I'm seeing anything worthwhile, right? but obviously it'll just be a little bit late since I record them after the market closes every single day. So, but that's the main thing I'm looking at right now. So let me know what you think down below. Ladies and gentlemen, again, without overcomplicating it, that's pretty much it, right? Again, we have the 100-day moving average above us as resistance. We have the 21 EMA and the 50-day moving average below us as support. So yeah, otherwise, RSI is looking fine. MACD is looking fine. It's looking like it kind of came back down and now wants to continue moving back up. It almost gave it a moment to cool off here with this consolidation, which is great. Gives them more room to run. And I think Tesla looks good. I really do. I think it looks more bullish than bearish. I truly, truly think that. But of course, nothing is for certain. And you have to play this in a reactionary way, waiting for whichever side to crack first. But that's all I'm seeing. And that's all I got for you for today's video. So as usual, if you enjoyed, please don't forget to hit that like button. And I'll see you tomorrow as usual. Peace.